Bank stocks, I know this is something that we have covered before and was a very important and crucial issue back in 2023 with the banking crisis. But if we, if the bond market is not doing well, and maybe if private equity is maybe not doing well either, this is going to have a significant impact on the banking sector. What is your current updated take on this?
Well, the banking sector is weak relative to the market. And in fact, if you just take a simple, stupid price chart and go back and look at where were banks in 2022. Remember, that was sort of a high early in 2022 for the market and went down to late 2022. Right now, the bank sector is 5% higher than it was then. So it's held up. It's gone with the market up, but it's so marginal that it's anemic off the page. Okay, and why? The market's way above the 2022 high, but the financial sector isn't that much above it. It's a lot more than the banks. But when we plot a spread relationship, a valuation relationship between the broad financial sector, XLF is a good ETF, and divide it into the price of the S&P, express that as a percent, and plot that chart going back to 2007, you'll see that prior to the top then, which occurred in October 2007, the S&P made its final all-time new price high peak. The financial sector had already dropped in price. S&P had into the summer of that year. S&P went up new high in October 2007. Financials didn't make a new high. Their spread was in collapse mode versus the S&P. It was taking out multi-year lows. So the relative performance of financials was breaking. No, the price of financials wasn't imploding. It was just very anemic to the stock market, so that when you plot the relative valuation, the financials were breaking structure to the downside as a subcategory of the S&P. That was a clear warning that there's a major top in process. We're doing the exact same thing now. While the financials are lingering up here, not collapsing sharply, and even banks have been up the last couple of days while the market's gone down. Like the Fed is doing their job there. The financial sector spread versus the S&P, and it contains big banks, insurance companies, broker-dealers, etc., is imploding through multi-decade lows of valuation compared to the broad market. Meaning, what the heck's going on in the financial sector? No, it's not the price chart collapsing yet. It's the relative valuation. That's what happened to warn you in 2007 that something big was about to happen. So, yes, we know the Fed is going to defend the banks. In fact, they're already doing it. It's measured in different ways, and there's analysts out there who look at that. And that's helping increase the money supply. But ultimately, that's an area to watch because its relative valuation is frankly in implosion mode compared to the stock market. So while everybody's looking at semis and NVIDIA, and we've called some breakage in NVIDIA recently, they need to be looking at the sectors that nobody's looking at, the ones that seem on a price chart to be, well, they're stable, but they're actually imploding versus the stock market. In other words, the stock market, if you measure it versus most sectors, they're going down versus the S&P and breaking technical structures. So it's not a good-looking situation. So you're right to raise the issue of the banks. Yes, ultimately, we're going to hear something from that. I'm not sure when, likely probably in the third quarter or so. But right now, they're giving a warning by their relative status.